In ancient Japan, samurai lived by a very simple code. Extra movements get you killed. If you swing your sword with unnecessary flair, if you try to look impressive, you die. Hundreds of years later, that exact same philosophy is the secret to making money in the financial markets. Yet highly intelligent people do the exact opposite. If you take a brilliant person, someone who spent 10 years in medical school, or someone who builds aerospace technology, and you put them in front of a trading screen, they will almost always lose their money. They will lose it fast. They will lose it with a level of efficiency that is honestly terrifying to watch. They are not stupid. In fact, they are too smart. They are applying a mental model that works flawlessly in reality to a place that has no connection to reality at all. In the real world, logic is rewarded. Hard work pays off. Complex problems require complex solutions. But the stock market operates purely on probabilities, random human panic, and cold emotional discipline. The market charges a massive, invisible tax on intellectual arrogance. We are going to look at the intelligence paradox. This is the tragic, highly entertaining reason why smart people completely reject the simple strategies that actually make money. And we will see how 7 ancient Japanese concepts hold the exact cure to stop your own brain from bankrupting you. I know this because when I worked as a data analyst for a prop firm, I had unrestricted access to the back-end servers. I watched 99% of smart people blow their accounts, and I watched the top 1% actually get paid. I pulled the raw, classified data on 4,000 funded traders to find the exact mathematical difference between the two groups. Then, I put all of it into a book. It contains the unfiltered server data. You will see the exact number of pairs they trade, their real win rates, their risk-to-reward ratios, and how long they actually hold their positions. It gives you the mechanical rules to physically force patience, control your fear, and survive the drawdowns that destroy everyone else. If you want to see the actual math of profitability, the link to the book is in the description. Mechanize your mind, or the market will take your money. You probably think that to beat a complex financial system, you need a complex strategy. This is the first trap. It is the complexity bias. Intelligent people spend their entire lives being rewarded for solving incredibly difficult problems. A surgeon does not use a simple method to fix a heart. An engineer does not use simple math to build a suspension bridge. So when they come to trading, they assume they need a massive, intricate system. They look at a basic strategy, something completely boring. Buy when the trend goes up, sell when it breaks down. Manage your risk. They look at this, and their ego simply refuses to accept it. They think that if it were really that easy, everyone would be rich. So they add 10 different technical indicators to their screen. They map out global interest rates, lunar cycles, and the heart rate of a hummingbird on espresso. They build a masterpiece of analytical perfection. Then, they lose everything. Miyamoto Musashi was a legendary swordsman who never lost a duel. He wrote a rule that explains exactly why this happens. Do nothing which is of no use. In a sword fight, extra movements are a distraction. They drain your energy and they give your opponent an opening. In trading, extra indicators and complex rules are useless movements. They distract you from pure price action. They make you hesitate when you should execute. The smartest thing you can do is accept that a profitable system is usually very dumb. Keep it brutally simple. But simplicity does not solve the emotional problem. You still have to deal with being wrong. Think about the life of a straight-A student. For 20 years they are conditioned to believe that getting 90% of the answers right is good, and getting 50% right is a terrible failure. They build their entire identity around being correct. Then they start trading. They find a fantastic strategy, a truly elite system, but the best trading systems in the world might only win 45% of the time. They are designed to lose small and win big. The smart person takes a trade, they lose. They take another, they lose again. By the third loss, their brain is melting. They are experiencing physical pain because being wrong feels like a personal failure. Their ego cannot handle a failing grade, so they completely abandon the winning strategy and start looking for a new one that promises they will never be wrong again. They chase a phantom, they run out of money. The Japanese have a proverb for this reality: fall down 7 times, stand up 8. In life, falling down 7 times means you are clumsy. In trading, falling down 7 times is just the cost of doing business. Losing 7 small trades is mathematically completely fine, as long as the 8th winning trade is big enough to cover the losses and pay for your lunch. You have to divorce your ego from the outcome of a single trade. You are playing a game of math. You are not taking a spelling test. Let go of the need to be right. But even if they accept losing, smart people still try to solve the problem with effort. This is the third curse. Confusing effort with outcome. If you want a promotion at your corporate job, you work 80 hours a week. You come in early. You leave late. You push harder than everyone else. Hustle culture promises that sweat equals money. Smart people bring this hustle to the market. They sit down at their desk at dawn. They stare at the blinking numbers for 12 hours straight. They click the mouse. They buy. They sell. They force setups that do not actually exist because they feel like they need to be working. They treat the market like an hourly job. Trading is not an hourly job. It is a sniper mission. Working harder in trading usually just means overtrading. It means paying more fees to your broker and taking horrible risks because you are bored. The market does not care how many hours you studied a chart. It does not pay you for your sweat. There is a concept in Japan that translates perfectly here. If you are in a hurry, take the long way around. When you try to shortcut your way to wealth by rapidly day trading and forcing the issue, you destroy your account. The long way around means waiting patiently. It means sitting on your hands for 3 days until the perfect setup finally appears. It means doing absolutely nothing for hours at a time. The less you do, the more you make. Taking the long way is the fastest path. This brings up a very uncomfortable truth about making money. It leads us right into the fourth trap, the dopamine of problem solving. Brilliant people love puzzles. Their brains crave intellectual stimulation. They want to figure things out. But here is the terrible secret about successful trading. It is completely, endlessly, aggressively boring. True profitability feels like data entry. You wait for your specific setup. You click a button. You set your risk. You walk away. You do this 1,000 times. There is no thrill. There is no adrenaline rush. Because smart brains hate boredom, they will actively sabotage a working system just to give themselves a new puzzle to solve. They will tweak a perfectly good strategy. They will start trading new assets they know nothing about. They will increase their risk just to feel something. They destroy their wealth simply to cure their boredom. The cure for this is an old proverb, sitting on a cold stone for 3 years. You must endure the intense discomfort of boredom. You have to sit on the cold stone and wait for the results. You cannot force the stone to get warm faster. If you are having fun while trading, if your heart is pounding and you feel a massive rush of excitement, you are probably losing money over the long term. Save your intellect for a hobby. Be perfectly bored in the market. And if you cannot force yourself to be bored, you do not need another technical indicator. You need a babysitter. You need forced discipline. That is exactly what the Alpha Equity Manager does. It is a piece of software designed to completely remove your free will the moment you start making emotional decisions. It uses a hard equity shield. Let's say you predefine your maximum daily loss at 2%. You take a bad trade. The market spikes against you, and your loss hits exactly -2%. Instantly, the software takes over. It market closes every single open position you have to protect your money. Then, it completely disables your buy and sell buttons for the rest of the day. You are physically locked out of your own account. And if your ego gets bruised, if you think you can just open the settings and change that 2% to a 3% so you can keep gambling, you cannot. The time-locked vault instantly rejects your input and snaps the settings back to your original rules. You cannot cheat the system. It even calculates your exact dollar risk before you enter a trade, so you have zero excuses. The link to download Alpha Equity Manager is in the description. Stop trusting your brain. Let a machine save you from yourself. Because when left to their own devices, smart brains do something very dangerous. They start trying to look into the future. They transition from reacting to predicting. When you look at traders, they fall into two categories: the prophets and the reactors. Intelligent people desperately want to be prophets. They want to predict the exact top or bottom of a market movement. They want to buy at the absolute lowest penny and sell at the absolute highest. Why? Because it proves they are a genius. They want to project their massive logical thesis onto the charts and force the market to obey their brain. So they build a theory. They assume that because inflation is up and supply chains are broken, a stock must go down. They short the stock. Then the market does something completely irrational. The stock goes up. The prophet is paralyzed. Their logic has failed. Their brain cannot process why the market is doing the opposite of what is logically correct. They freeze. They lose their money. Successful traders are reactors. They do not predict anything. They do not care what the stock should do. They only care what it is actually doing. If the trend is going up, they buy. If it turns around, they sell. They practice having a mind like water. Water does not predict where the rock will be in the stream. It does not write a 20-page thesis on the geological placement of the stone. It simply flows. When it hits the rock, it naturally flows around it. Stop trying to predict the future. The market owes you nothing. Be the water. This desire to predict the future is what causes the sixth trap, the curve-fitting trap. When a very smart person decides to automate their trading, they build an algorithmic system. They take 10 years of historical market data and they run their code. They look at the results. It shows some losses. But because they are smart, they know they can fix it. So they tweak the variables. They add filters. They optimize the code over and over again to remove every single historical loss. Eventually, they create a backtest with a perfectly smooth upward equity curve. It looks flawless. They turn it on in the live market. It dies instantly. They built a flawless machine. The market broke it. This happens because of curve fitting. They optimized away all the natural noise of the past. They created a rigid system that only works in a historical vacuum. But the live market is messy. It is chaotic. It is full of unexpected news and weird human behavior. A perfect system cannot survive a messy reality. The Japanese concept of wabi-sabi teaches the acceptance of transience and imperfection, finding beauty in the flawed. A robust trading strategy must be wabi-sabi. It must accept flaws. It must tolerate drawdowns and messy price action to survive the real world. A system that expects perfection will shatter the moment it encounters reality. Perfection is the enemy of profit, and rigidity is the enemy of survival. This is the final and most destructive trap of all, thesis blindness. What happens when an unstoppable, brilliant fundamental thesis meets an immovable downward market trend? The smart person spends 40 hours researching a company. They read the balance sheets. They listen to the earnings calls. They know the CEO's middle name. They build an ironclad, perfectly logical thesis on why this stock must double in price. They buy heavily. Then the stock drops 30%. A normal person might panic and sell. But the highly intelligent person does something much worse. They hold. They refuse to accept they are wrong. They think the rest of the market is just stupid and hasn't realized the truth yet. Because they are smart, they become completely rigid in their belief. They average down. They buy more. They ride a terrible investment all the way to zero because their ego will not let them admit defeat. They did the math lied. The samurai understood this fatal flaw. Softness overcomes hardness. A massive, rigid oak tree looks incredibly strong, but when the typhoon comes, the oak tree snaps in half and dies. The bamboo looks weak, but when the typhoon hits, the bamboo bends all the way to the ground. When the wind passes, the bamboo stands back up. In trading, intelligent people often trade like oak trees. They plant their roots in a thesis and refuse to move. Successful traders trade like bamboo. The moment the market proves their thesis wrong, they yield. They cut their losses immediately. They bend to the reality of the price action. You cannot fight a typhoon with logic. You just have to bend. This is the ultimate paradox of the financial markets. The exact traits that society praises you for are the exact traits that will empty your bank account. There is an invisible genius tax in trading. The smarter you are in your day job, the more money you will likely lose in your first 2 years in the market. Doctors, engineers, and lawyers blow up accounts every single day because they simply cannot accept that the market is not a machine they can fix with a wrench or a scalpel. This is why a person of perfectly average intelligence will almost always win. The average guy who just draws a couple of lines on a chart and follows his simple rules without questioning them will destroy a genius who constantly asks why the market is doing what it is doing. In this game, mechanical obedience is vastly superior to intellectual curiosity. If you want to use your massive intellect to change the world, go write a book. Go build a business. Go cure a disease. The world needs your mind. But if you want to make money in the markets, you have to do the hardest thing you have ever done. You have to temporarily turn off the very brain that made you successful in the first place. Sit on the stone. Bend like the bamboo. Stop trying to outsmart the chaos, and just let it pay you.